What's going on, guys? My name is Arjun and welcome back to my channel. Today, I'm going to continue giving you guys recommendations to help you build your beginner portfolio. Please remember that this is not financial advice and this is just my opinion and my recommendation, and that you should do your own research and look at whether or not each recommendation can fit into your portfolio and work for your investment objectives. Before we get into today's stock, I want to go over quickly what are the criteria we're looking for in these companies and what you should do with these. The first thing is we're looking for companies that will outperform over the next 5 to 10 years. So our investment time horizon is a long-term time horizon. The company should have the following criteria: strong overall growth, profitability or a path to profitability soon. They should be in an industry that's evolving and growing and not in a dying industry. They should have a moat in their industry. And basically, you should be able to answer the question, are they a game-changing company? And finally, they should have strong leadership. Strong leadership is what's going to allow the company to continue to grow into the future. A good leader will set out a vision for the future and execute on that vision. So now let's talk about what you should do with these recommendations. You should look to add to these positions consistently over time. I believe that these are good companies and good stocks that will be useful for you to build a core part of your portfolio with. Being a core part of your portfolio means that you're going to keep adding money to this and really leave these companies to grow. Periodically, you should be willing to take some profits out so that way you have more money to invest when stocks come on sale. Finally, please have patience with these investments. Patience in two ways. First, have patience in getting a return on these investments. These companies are going to do well over the long term. So these are not going to be investments that are going to return 100% in a week for you. The second way to have patience with these investments is when you're buying and building your positions. Don't invest all your money into these companies at once. Buy a little bit at a time and buy consistently. When these stocks come down, be ready to buy more. In today's episode, the company we're going to talk about is Illumina. So what does Illumina do? Illumina is the leading manufacturer of DNA and genetic testing equipment. They basically have set the industry standard for gene sequencers, and each newly installed machine creates a reliable stream of revenue for the company, as the customers have to continue purchasing the consumable kits to analyze genomes. So again, this is very much a razor and blade model, just like IDEX was. This company is going to continue to flourish regardless of which company makes the next big genetic drug. So as an example, Illumina's machines were key in helping to create the COVID-19 vaccine. So now let's talk about Illumina's profitability and growth. The pandemic definitely had a negative effect on Illumina. Their revenue growth was dragged down by their first quarter and second quarter of last year. They finished the year strong, however, with revenue down only about 9% to $3.2 billion for 2020. They were able to generate $891 million in free cash flow. And in 2020, they had solid profitability, $664 million. Despite issues from the pandemic. But this is just the beginning of a massive market opportunity. Genetic testing is just beginning to take off. With more companies making drugs, everyone will need Illumina's machines. So now, let's talk about Illumina's moat and their sustainable competitive advantage. They lead the genetic testing space. They have close to 75% market share, which is huge. And they're working to bring down the cost of sequencing a genome from $600 to $100. They've already brought the cost down from tens of thousands of dollars to $600, and now if they can get the cost down to $100, they're going to open up a whole world of new opportunities. They've been making acquisitions to position themselves in other markets as well. They recently acquired Grail for $8 billion, and Grail uses Illumina's machines to create cancer screening tests. And many of the leading cancer drugs require a companion genetic test, all of which can be supplied by Illumina. So now let's take a look at who's leading the charge for Illumina in creating this innovation and growth. Their leader, Francis D'Souza, is the former founder of a company, ImLogic, which was acquired by Symantec, and he's been with Illumina for 7 years as a president and then the CEO. Under his leadership, the stock price has gone almost 3x. They work behind the mission to improve human health by unlocking the power of the genome. So that means they're driven by something bigger than just profits. They have a mission and something that's going to continue driving them to innovate and create new. So now, most importantly, what has the stock done in the last 5 years? In the last 5 years, the stock has gone from 175 to 400, which has been tremendous growth. It currently sits around 20% off of its all-time high. Still, its one-year return is close to 46%. And as with any other investment, there are some risks involved. One of the main risks is the monopoly risk of Illumina. They may not be able to continue their expansion because of monopoly concerns. For example, they recently tried to acquire Pacific Biosciences, or PacBio, but they were shut down by the British antitrust regulators because there were other companies that complained that Illumina would become too powerful to handle. And another risk that could affect Illumina is if there is a slowdown in genetic therapies after COVID is done. However, I feel that this risk is unlikely because people will see that gene sequencing and genetic therapies are the future of medicine, and this is going to allow us to advance targeted therapies for people. So now let's quickly go over whether or not Illumina checks all of our boxes. First, strong overall growth. Although their growth was down due to COVID last year, previously growth had been very strong. And the Illumina CEO recently said that they felt that they were just at the beginning of the growth in genetic sequencing. The second criteria is profitability, or a path to profitability soon. Illumina has been solidly profitable for many years, and they had $891 million in free cash flow, which is very impressive. The third criteria is that they're in an industry that's evolving and growing. Genomic sequencing is just in its early innings, and many more companies are going to be coming out with genetic therapy drugs, and they all will need Illumina. Illumina is like the arms dealer for the genetic therapy drug market. The fourth criteria is whether or not they have a moat and competitive advantage in their industry. Are they a game-changing company? The fact that Illumina's machines are considered the industry standard and with close to 75% market share shows just how strong and how big of a moat that they have built. The final criteria is whether or not they have strong leadership. Although it's not the founder anymore, they still are led by an experienced risk taker who is making smart acquisitions for their future and to help them continue to grow into the future. So Illumina is a great company in a very promising, new, and growing space. But again, I just want to remind you guys, this is just my recommendation and my opinion. And my hope for this series is that you'll be able to use my recommendations to build yourself a portfolio of core positions that you can use for your future and to grow your portfolio. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, subscribe to my channel, and let's head on over to the next video.